In this morning's Eye on Money, we're watching the stock markets after yesterday's biggest drop since May. The S&P 500 lost 75 points, 1.7%. The Dow and Nasdaq also had big losses ahead of a two-day Federal Reserve meeting that starts today. CBS News business analyst Jill Schlesinger is with us today. Jill, what is going on? What spurred the mass sell-off?
Now, I don't want to freak everyone out, but some are calling this China's Lehman Brothers moment. And this is what's going on.
But you don't want to scare people.
But I don't want to scare people because I don't want you to read about it and then get scared. So let's put some context into this. There is a big property company in China called Evergrande, used borrowed money to expand, built a lot of residential units, and there's been a housing boom in China. Chinese regulators have cracked down on some of these practices, said don't use so much borrowed money, company starts going south, and now with all this borrowed money due to be paid back, there is a worry that this company's problems, this bankruptcy that's looming, could spread in China, could spread to the whole Chinese economy, could spread around the world. That contagion fear is what triggered yesterday's sell-off.
Now, after a drop like this, there's two ways to look at it. There's panic, right? Let's get rid of everything. And then there's it's like a scene out of 300. Leonidas saying, "This is where we hold." What would you recommend?
Well, somewhere in between. What I think is interesting is yesterday, large investment firms took the opportunity to look at what they were holding and saying, wow, maybe we got too much risk in these portfolios. We saw a lot of big investors selling. Now, think about it. Coming into the session, they were up 18% on the year in the stock market.
Right.
That comes after last year's 16% gain. You see some shakiness and you say, let me take some risk off the table. For us, retirement savers, people who are plodding along, this is your moment. You take a deep cleansing breath. You say, let me stick to my game plan. Let me not fall into the trap of selling. And after all, you look at where we are this morning and we see a rebound is looming. It doesn't mean it's going to be perfect. But if you stick to your game plan, I think you are better rewarded in the long term.
It's hard to take deep cleansing breaths when you see the numbers drop. It just is. It's just human nature. But you're always calm.
Well, I'm not. I want to say this. When I'm not calm, when everyone is jumping in and markets are making new highs day after day. There is just as much risk when the market is up as when it's down. I think it's incumbent on us as regular people who are investing for the long term to remember why we're investing, have a game plan, stick to the game plan. It will serve you well, I promise.
That's right, Jill. You're the best. Take a breath, and you guys take a breath and don't go anywhere. Thank you so much.